You're about to see the only trading approach or strategy that can realistically help you develop a career as a day trader. Whether you're brand new to this or experienced, it doesn't matter. What I'm doing is actually pretty simple, and I'm even going to show you a live trade where I took almost $7,000 out of the market in just one day. But most importantly, you're about to see that the way that institutional traders like myself approach the market, it's completely different to anything I see here on YouTube or social media. But the good news is anyone can do it and start profiting from it. So let's get into it. Okay, so straight away you can see it's completely different what you're seeing here to what you're used to seeing. My live account here, okay, real money. I'm already in a trade. There's a reason for that. It's actually completely different to what you may have used to be seeing on anywhere really, and that's going to become apparent in a moment. In fact, what I'd like to do is let me just pause this for one moment. Let me give you some context of the day and show you how institutional traders are looking at things very differently to the retail community. And that's really important for you to recognize, because next time you're looking at whatever it is you're looking at, I want you to really recognize what you're missing out on. So this is market profile. I've spoken a little bit about it before. I'm going to keep it relatively simple, okay? It looks complicated, it really isn't. It just represents the previous days. So you can see the current trading day here. What this allows me to do, without having a big mess in front of me, is it just allows me to see where the previous days traded, okay? And virtually all institutions that I know of, and obviously I've worked in several for many years, this is what they are looking at. They like to simplify things, okay? So over the last 3 days, we can see there was quite a big range. Quite difficult to see this on a chart. This allows you to really break it down into a simplistic format. Like I say, some of these things that institutions are using, a lot of the times we just assume they're complicated. They're not. They're actually the opposite, which is the irony. So, you know, if you haven't really seen these type of things, it's something you really need to start thinking about. The point is, and I'm pointing this out because I don't want to just blindside you with loads of numbers and raw data going on. And yes, it is completely different to what you might be used to seeing, but let's put some context behind it on this video. Like I said, something I've not really discussed in a lot of detail before, but what you can see here, which the market profile allows us to see, where are we? It's a nice map of the day. Where are we on the day relative to the previous day? So we can see we had nice balance for 3 days. Now we've opened up outside. A lot of people would be going with the momentum, going south. But what they may have failed to have realized is that there's a big gap between where we are now and really where most of the sellers would have initiated their positions overnight. So there is a big gap. So there's a potential that actually the market may want to retrace and fill some of this gap. Okay, do you see? Institutions are really doing some relatively simple thinking, but what's allowing them to do that is they've dumped the indicators. There's no indicator that's going to allow you to do this type of analysis. Anyone's capable of doing it. They just need that freedom to be allowed to do it by removing some of the things that get in the way. You know, things like indicators you may think are helping you, they're actually doing the opposite, as I'm showing you here. Keep it simple, think a little bit outside the box, present some amazing opportunities to do what no one else is doing. And really that's what's going to make you money. So let's get back now into kind of the micro, really deep down into the entry area. So you can see I'm actually already in a trade, okay? And I'll show you a slightly different perspective here. Again, something I don't really get into, but I want to really get you thinking a little bit more than some of my previous videos now. So this is the week, generally shorting most of the week, and then coming in, this is the day you're about to see. You can see the 3 days of balance there that we've just talked about on the market profile. Okay, we've come out of it, and I recognize we're quite a fair distance, and we may want to fill the gap. Okay, sort of counter to what the retail community may be thinking. So now let's actually have a look at how I played this back, okay, and some of the methods that institutions are employing, which are completely different. So we can restart here So again, this is the actual day, trading day. Again, to reiterate, my live account, you can see they're very open about these things. It's important, you know, that what I'm telling you, I'm putting real money behind it. What I'm actually waiting for, if you look at these sellers here, I want to see how these sellers, so let's pause it again, it is quite important. I'm going to bring it here on the footprint so you can actually see the actual footprint from the day, and my live fills there. These sellers, right, so I might be covering it slightly, let me just move it across a little bit. These sellers, okay, these are those momentum sellers, possibly the retail community that are chasing the market. Like I said before, let's have a look. I know there's a lot going on here, but it's fairly simple. If you just break it down and actually just stop for a moment, remove all those lines and things that you have on your chart and keep it quite simple. We know, as I said, we've opened up down here. We want to fill this gap. So obviously there's a lot of people who are doing the opposite to us, more going with the momentum, not recognizing or appreciating because they have all these indicators in front of them. Hang on, I've got this massive gap. Maybe I need to be thinking about things that doing the opposite, in the sense that the market's gone too far. So what we need to do is we need to identify those players that may have gone, the crowd basically, right? The retail crowd, the retail sheep, whatever you want to call them. We need to identify them in terms of their positioning. Why? So we can know what prices they've been executing at. So we can see that down here. Now this is the S&P 500. I trade it a lot. Doesn't matter if this is FX. You've seen me trade FX a lot in the past as well. Doesn't matter what market it is. But you can see you can apply some incredible analysis, proper analysis. You know, moving all that junk off your charts and actually looking at the raw data. Let's have a look at how the market reacts as we come back into that area where those early sellers got in. Okay, and I'll describe to you what's actually happening here. It's fascinating to watch in real time. So let me press play. You can see here the market has come back now. What I'm looking for is, what are these sellers doing, right? Probably, I'm guessing, the market's gone slightly against them. They've got nervous. A lot of them may want to get out at break even. Okay, that happens, right? You know, if the market, think about yourself. Let me just pause this again. Again, I don't want this just to play out. I want this video to be slightly different. A lot of people have been asking me for some deeper analysis, and that's what you're getting here. So hopefully you see that as a good thing. I'm actually breaking this down properly for you. You're not going to see this anywhere else, so hopefully you find it valuable. Think about yourself. If you get in really late into the market, so you can see here, chasing the market, like I said, the last 3 days we already know somewhere up here. Let's put that here. Big gap up to those 3 days that we need to fill. You may have done the opposite and got a little bit of FOMO, got excited, seen the market selling off heavily and not recognized that actually the opposite is happening. So you may have got short, right? When the market goes against you, like this, you get a little bit nervous. You think, oh my God, maybe I got it wrong. And then when it comes back down to your position, you just breathe a sigh of relief and think, oh, thank God I was able to get out at break even. So I don't know that's going to happen. That's why I haven't entered yet, but that is what I'm looking at, okay? Now so I'm going to be looking to see the reaction of these sellers, okay? So you can see as the market comes back in, I can see the buying starting to come in quite aggressively now. So I've entered a position. Now something to recognize whilst this all plays out, okay? It's all nice to see all of this, but it's nice for you to actually think about some of the thinking that goes on behind it, and something that is very different here, and hopefully you've picked up on it. I'm actually already in profit when I entered these positions just now. I'm already up almost $3,000. I want you to realize how institutional thinking is very different. You ask any retail trader when they're up $3,000, would they be adding to their positions, taking on more risk? No, they wouldn't. Retail traders don't think like that. They're very scared. They think, oh, the traditional sense, I've got $3,000, I need to bank it. Completely the wrong way to think. You can see how much opportunity there may be here potentially to go and continue filling this gap all the way up. So that's what I'm doing. And that's two things I want you to recognize from this video. is not only the analysis, but also the different way of approaching risk management. It's completely different. Okay, so I'm already up 3K, okay, but that doesn't bother me. I'm putting that, you see, you have to detach yourself from that. Is there an opportunity here, regardless of the fact that I'm up money? Do you see most retailers, they trade scared. They just want the money, let me grab it. That's not how institutions go on to make they might be up 3K in a day. How do you go on to make $6,000, $7,000, $8,000, $9,000 in a day? How? Well, you need to obviously recognize that the opportunity is separate and mutually exclusive to already having money in the bank. Okay, you can't be thinking along those lines. You'll never be able to grow your equity curve properly. So another thing I want you to notice here, finally, before we wrap up, is I've taken some profits here, but I still haven't taken the original position, right, that I took here. How many times you see retail traders open positions and then they scale? I haven't even scaled the additional positions I took on. I'm only taken off the previous positions that I took on. Okay, now you can pause this, think about it. You may need a few moments, watch it over again to recognize what I'm saying here. It's these early positions I took on. Those are the ones that I've scaled. The adds, the additional trade that I just took on because I saw obviously sellers taking some break evens on their positions. Those positions I've yet to take off. You can see me start to take those off here. Okay, I'm going to fast forward it a little bit and you see that's it actually. In fact, that was it. So played out quite nicely there. You can see for a total of $6,762. So as always, like to be pretty open about these things. You can see here my blotter, $6,762, which puts me for this week, if I just do this week, in fact the whole month, I was off, as many of you know. I got engaged earlier this month, so these are the only days that I've traded. I was away last week, so this week alone, that now puts me up at $19,250. Most of the trading style is similar to what you see here. Let's have a very quick summary before we wrap up. So number one was sellers wanting to break even. Okay, are we all agreed on that? So you can see here, remember the sellers came in early, the retail traders wanting to go with the momentum, not recognizing that the market needed to pull back and replenish some inventory, fill the gap. The market went up. As we came back, these retail traders were very relieved and thought, oh, thank God the market's come back to break even. Let me take the break even, basically, because I was in a slight loss. And that, think about it, if you were selling and you go back to break even, you need to buy. So that caused the buying to come in, and that's when I got into my position. And then number two was to recognize adding, okay? Adding, even though I'm up $3,000 on the day, I'm obviously recognizing there's an opportunity to really push that equity curve, because other days may not be so good, right? These things you need to recognize. The equity curve is over a month, over a week, as I've shown there. These type of trades are going to make up for days where you don't necessarily have so much opportunity. So you can't just bank your profits and be done for the day, as I hear all these people in retail saying, complete and utter rubbish. Okay, so as you can see, what institutional traders like myself who have been trained professionally to do this for a living are doing is completely different to what I see being shown here in the retail commercial space. Following the retail path using random lines on your chart may seem appealing, but ultimately will result in failure, as I'm sure you're already finding out. So how can you avoid falling into that trap and get onto the right path? Easy. Watch this video here to get started on the right path. You'll be surprised just how simple this can be.